to Prime Property, your weekly real estate reckoner. I'm Nayantara Rai, and this is what we have on the show today. The new income tax return forms will need assessees with more than 50 lakh rupees of income to start valuing their land and inherited properties. Tips on how to overcome this challenge coming up on Prime Property. The government's move this week of allowing 100% FDI in e-commerce will augur well for commercial real estate, malls and warehousing. We tell you about one of the largest commercial real estate deals worth almost $900 million to $1 billion that may be sealed by the Hiranandani brothers. It's the start of a new fiscal and a new tax assessment year. The new income tax return forms requires all the assessees with more than 50 lakh rupees of income to also declare their net worth. Therefore, all such assessees will have to henceforth declare cost of land, building, besides jewellery, gold, vehicles, yachts, boats and even aircraft, in addition to cash in hand. This is under a new reporting column, Asset and Liability, that's been introduced in the income tax return form. It is certainly going to be a challenge to declare the cost of inherited properties. I tried to find out more in this conversation with Ved Jain, the former president of the Chartered Accountants Association.
See, the big change is the requirement under the new form that every taxpayer having income above rupees 50 lakh need to give the detail about its net worth. Earlier, this information was required by taxpayer having income above rupees 25 lakh, but those who were carrying on the business. Now, under the new law, the requirement is for every taxpayer having income above rupees 50 lakh, he need to declare the assets. Assets will include immovable property as well as movable property, and the liabilities regarding these assets. So, what I see is with this change, all taxpayer, including salaried people, those who are having income from house property, people who are having income from interest, all these will be required to provide this detail. And in the first year, it may be a little difficult for all those taxpayers to collect such detail. There may be a case one may have bought this property 20-30 years before, so he may not be having the information about the cost which he has incurred by buying this house or acquisition of any assets. Similarly, there may be taxpayer who may have inherited some property, they may not having the detail about the cost of acquisition of the property, etc. So, but I believe over a period, all these taxpayers will be able to collect this detail and will be able to provide the information.
Mr. Jain, you just explained how difficult it is going to be to value old properties, inherited properties. That's going to be a challenge. What I also want to understand is why this cutoff of 50 lakh rupees for income? You just said businessmen earning more than 25 lakh rupees anyway had to make such disclosures. So why 50 lakhs?
See, earlier it was only for business class people. Now it is for all taxpayer, and I believe the government has thought it fit. In case with 25 lakh rupees and above income, all taxpayer being required to file this detail, it would have been a little bit difficult, and probably public outcry would have been there from the salaried employees to fill in this detail and to spend extra money to collect these details, etc. So keeping in mind, I believe the government has made an experiment making it mandatory for all taxpayer having income above rupees 50 lakh, including salaried employees, because the number will be low and there will not be hue and cry. But I can believe that down the line, maybe next year or 2 years thereafter, the government may reduce this 50 lakh rupees condition and may bring it down back to 25 lakh rupees. In the process, those taxpayers who are having business income also, they also get benefited, because now the requirement was up to rupees 25 lakh rupees and above. So in those cases where income from business is between 25 to 50 lakh, they will not be required under this new rule to fill their detail about the net worth, etc.
And would you say the tax department is being aggressive, or is it following a global practice of asking for all of these kind of disclosures, the number of properties owned, etc.?
I will say this is a thought process which changes over a period. See, what happened is, you will see that in the year 2000, we have been saying that we are heading towards simplification, and that's why we brought Saral Farm, we brought Sahaj Farm, making the life of the taxpayer more easier and more comfortable. But over the last 2-3 years, I believe, or the last 3-4 years, this process has changed. Now this thought process, now the new is that to get more and more information from the taxpayer. As you can see, that written form which used to be of 2 page or 3 page, though for the namesake, Saral and Sahaj continues to be 2-3 pages, but in fact it has run into now 31 to 32 pages. So more and more information is being sought from the taxpayer. This is the thought process which has developed in India over a period. This type of information by and large globally is not required. By and large the tax department relies upon and has a confidence in the taxpayer. And sometimes you believe that you do not need to have a confidence, and that's why you all end up with asking so many details from the taxpayer. Frankly speaking, what taxpayer is required to pay tax on its income. Now when you ask detail of your assets and liabilities, you are making sure and trying to find out and verify that the income declared is the correct income, because once you have given the detail of the net worth this year and then it will be compared next year, if there is an accretion to the net worth which is beyond the income which you have declared, the tax department can raise an issue. That's I believe the whole objective looks to be the tax department.
And what do you think is going to be the impact on the real estate market in particular? I ask you this because the sentiment in the property market is already so bad. Now, assessees will have to make new disclosures. They're going to have to hire tax consultants, figure out valuations, etc. Obviously, the intention is also to curb black money, and we know all about that black component in the real estate market and transactions that take place with cash. So what do you think is going to be the impact on that? And also what happens to all of those that have made bookings for apartments? Will that also have to be included in this net worth calculation?
Frankly speaking, I don't think that any impact arising on the real estate or housing sector or a Benami transaction. See, what one will declare is the asset held by him and which has been acquired from the legitimate declared sources. I don't believe that anyone who has acquired a Benami property from undisclosed sources will be declaring these assets in the return of income. But over a period, it may transpire that the government may, with the help of the computer, try to find out various properties which are registered in one body's name and in one PAN account number. And if that property is not found in the return filed by that gentleman in the PAN on that PAN number, so probably the government may question these by people. So it will be a long run process. Over a period, I will say down the line, 3 years, 5 years, this verification may happen. But as on date, I don't think that there can be an issue about declaration of the property where you have acquired the property, where you have made a booking about the property, which is arising from the disclosed sources.
And what would your advice be to all of the impacted assessees watching you right now?
So what we will advise the client basically is to try to find out the detail. As I said earlier, it will be in the beginning, the first year, it will be a very tough exercise, a difficult exercise. Probably you will recall when this new government came into power and all government employees were asked to file detail of their all assets and liabilities. And there was a lot of, I believe, resentment with the central government employees. The period has been extended over a period of time and again, because those were required to declare their jewelry, their movable property, their assets, all assets in the name of themselves and in the name of the spouse, etc. I think this is an extension of the same. Now all taxpayers are being asked to give detail of complete assets and liabilities. And in the first year, I see as a consultant, I will advise all clients, yes, they need to go back, look to their bank account, look to their property, look to their asset, and find out even in their household how much jewelry is with them, how much jewelry is being kept by the wife or the daughters or the daughter-in-law. All those issues now need to be, I think, examined at least by those who have income above rupees 50 lakhs now.
Then from what you're saying, it's also women empowerment in a sense. If a woman was to inherit property, her rights have certainly been strengthened. It may not be so easy for a spouse or an in-law or a brother, etc., to try and take over that property or claim rights on it.
No, the issue will be because a property, in case the money has gone from the bank account of the taxpayer, now he need to account for in whose name this property is and who is the owner and how it has been accounted for.
Well, we hope that was helpful. With that, time for a short commercial break. On the other side, we find out how the government's FDI guidelines for e-commerce firms may impact the real estate sector. Stay tuned for that.